Alright everybody, this video is going to show you how to enter the trades that we're going to send to you every day. Okay, so first thing we're going to talk about are, we're going to go through an explanation of what kind of trades we take, what kind of trades we don't take, and what kind of orders that we enter. We'll show you the different types of orders and give you a quick explanation, and we're going to take you through a demo email so you can see how to read the email, how to interpret it, and then how to execute what we show you. Okay? So the first thing I want to say is that most of the trades that we take are longer term trades, or what I like to also call swing trades. And we talked about in some previous videos, or maybe you saw one of our webinars, that, and I always talk about this, that currency pairs 80% of the time trade in a range. Okay? And while they are in that range, we like to trade the swing movements. Up and down, up and down, up and down. We buy at the bottom, we sell at the top. We buy at the bottom, we sell at the top. Ultimately, eventually, those trades will break out of that range, okay? In which we will end up getting stopped out of a trade, and then we start a new range. But I want you to know the reason we talk about this is the trades that we send out, because we know that everybody has a busy lifestyle, and you can't get an email at 3 o'clock in the morning telling you to buy the euro. You have to jump out of bed, run downstairs, grab your computer, get in before it's too late. Okay? So the trades that we give you, usually you have a day or two, sometimes a week or two in advance. Okay? Some of the trades that we send you, I might send you 5 or 6 trades in a day. And you'll set them into your software, and we are waiting for the currency pair to move, for price action to move to the position of where we want to enter, which is either going to be a sell position or a buy position. Okay? So what that means is you're not just going to log into your software and be in a trade live. You're going to set up the trade in advance. We're planning in advance on the trade to take effect. Okay? And sometimes those trades won't take effect. They never happened. So we'll cancel the trade. Sometimes they'll take effect and we'll get stopped out, which means the trade goes against us. All right? But a lot of the times we're going to be in those trades and they're going to hit and we're going to ride them out. And sometimes we'll be in and out of those trades in 4 or 5 hours. Sometimes it may be 4 or 5 days. Sometimes we may be in a trade for a couple weeks at a time. So with that, most of the trades that we take, most of the orders that we enter into your trading platform will be what's called a limit order. Okay, and what this means, let's say we're buying, let's say the euro is at 1.2600, and we want to buy at 1.2500. Okay, what we are waiting for, because we see that the euro is trending up. I'm just for an example. Okay, so because of that, okay, we are waiting for the price of the euro to drop down to get us a good point. Imagine buying real estate. Okay, you're buying a house, you know that's worth $100,000. It's a great opportunity, but you want to buy low and sell high, right? Because you're going to flip the property. So what you are waiting for, you're going to negotiate a price, negotiate a price, and your goal for that property is to get them down to $80,000 you can buy and then turn around and resell it for $100,000. Okay, this is, say that's one of your strategies. This is going to be the same strategy with what we're doing here while we're trading Forex. We're not jumping into positions. We're not listening to news reports and what other people are saying and just clicking buttons and jumping into trades. We're looking in advance on the most high probable and less risky trading opportunities that we have available, and we enter those trades in advance. Many of the trades will never happen, so we just cancel them. Okay, but when they do hit, these things work very well. And this is why we over at Trade Advisor Pro, why the amount of pips that we gather every month is astronomical, because we are patient, we wait, and we choose the right opportunities. We put a lot of research into choosing which ones are the right opportunities. Okay, so with that, I want to go to a screenshot here, and we're going to go to 2 different screenshots. We're going to actually go between an email, a mocked up email that would look exactly like the trade signal emails that you're going to be receiving, And then we're going to use FX Solutions GTS software just for an example and show you how to take the information we're giving you and how that we're going to manage each trade, okay? Alright, so here we have an example of what an email, this is pretty much laid out exactly what a trade update is going to look like. Okay, now you can see here that we have these it has a little intro. Make sure you read the whole thing, okay? This is nothing you want to skim by. Because sometimes we're going to tell you to close a trade that we thought in advance was going to be a great trade, and we decided later on because something happened in the market, maybe in the fundamentals or the sentimentals, or a shift is changing in another currency pair that is kind of giving us a forecast that this trade may not go the way we want it to go. So you want to make sure that you have all the information, because if we told you enter a trade and then a week later we say cancel that trade and you stayed in, you may have a losing trade in your hands because you didn't read the email. So we're putting this information together and putting a lot of work into it. You need to take the time to take a look at what we're putting together. So read the entire email, and there's videos in there. So we have a new video we posted. Go watch the video, okay? Because a lot of times we're explaining things in depth that you need to know, okay? So first of all, it says, hey folks, we had a great trade potential coming up. Actually, in here we show there's several sections, okay? And so you have these bold areas of 4 sections. We have new trades. We have cancel trades. We have pending trades. And then we have open trades. Okay? So let's talk about these 4 areas and what they mean. Now, new trades. These are new trades that we are just sending out. This is the first email that these trades have come up. And these are the trades that you need to take the information we're giving you here and enter these into your software. Okay? Now, cancel trades. These are trades that we already sent you. You've already entered into your trading platform, into your trading software. And now we're deciding that we don't want to get into that trade, and so we're going to cancel the order before it ever takes place. Okay? Pending trades. Okay? Pending trades are trades that we already entered and they already took effect. So we're already in. No, I'm sorry. Pending trades are trades that we have already sent you. You've already entered the software, and now we are just waiting for them to happen. Okay, and I'll show you this hands-on here in a second. Excuse me. And open trades. Now these are trades that we sent you before. You entered them, so they were a pending trade, and now the currency pair hit, and now we're in this trade. So open trades, these are trades that we are in. Okay, so we'll start with the top and show you how to take this information. Okay? And before I do that, I want to add one little change here. Okay, all these profit targets, normally we won't send them with the targets, okay, because it's too difficult to explain. But I'm just gonna simplify this little piece here, just because for this demo purposes. I'm going to change this, that we're going to pull out the profit at 1.5930. Okay? So that'll make it easier for this demo purposes. Okay, so the first thing we're going to do is take new trades that we have sent to you, and you want to enter them into your trading software. Okay? So the first one we're saying we want to buy the Great British Pound US dollar at 1.5882. We want to put a stop loss at 1.5830. That means if the trade we're wanting to buy at this level, but if the trade ends up dropping down further than we originally planned, it takes us out of our trade. And make sure you go through the video in the equity management in the members area so that you understand how to properly calculate how much you need to trade of your account balance at one given time. Okay? But trades are going to go against us. And we want to make sure that if we do, we control when we get out. In other words, if the price drops all the way down to this point, we feel the trade has been compromised, it's not a good trade, and better to lose 1 or 2% of your account and than rather be stuck in a trade that you never use to stop. Let me explain this one thing really clearly. Use a stop loss always. never get into a trade unless you have a stop loss. Okay? Never. Trust me, I've made a mistake. I've lost almost $100,000 in one day about a year into my trading career because I got cocky and I was doing very, very well. And I was making some astronomical returns. I was leveraging too much of my account at once. And I got cocky, went away for the weekend, or a 3 or 4 day trip actually over the weekend and into the next few days. When I got back, I was expecting my account to be through the roof. Got cocky, did not use a stop loss, and I ended up getting margined out. And yeah, that was not a good situation. My wife was definitely not happy at all. But a learning process, I guess we all have to go through, and you can learn from my mistake. Always use a stop loss. Okay, so in this trade, we're also saying the profit target is 59.30. In other words, we're going to buy here. We're going to sell, and we put a stop loss here, and then when the price gets here, we're going to close out the trade in profit. Okay, so let's go to our software, and this is FX Solutions GTS Pro system. This is just a practice account, so I can show you how we're doing this. Okay, so right now we have, and your software will be different. And here's the thing: if you can get on whatever brokerage firm you decide to use, you can have them show you how to use the software and how to enter these trades. Okay, if you have any questions, go to our support area and send us a ticket, and we'll be glad to put together a training video that shows you how to enter trades into your brokerage firm's software. Okay, we want to make sure everybody has a chance to be successful. And yes, if you're the only customer that is using one particular brokerage firm, we'll put together a video just for you. We want everybody to be successful. Okay, so in this software, I see that here's the Great British Pound US dollar. Okay, we said to buy at 54.31. Okay, of course, for my demo purposes here, I'm writing bad numbers down because the price is already way below that. So let's go back to this original email. Hey, this is not scripted, man. This is the real deal. So let's change these a little bit here. Let's say, and we're going to change this to fit. This is change these to 3. Okay, and then this to 4. Okay, this will work now. So we're going to take those numbers, 53.82, 53.30, and 54.30 to pull a profit out. And hey, for those of you who want to get my winning trade sent directly to your inbox, and in 2011, we got 8,475 pips over a 12-month period. If you want to see how we can send you those trades directly to your inbox, go to the description below, and you'll see the information there, and you can go there and get registered for free. All right?